You know how there's that saying, there's decades where nothing happens, and then there are weeks where decades happen? I kind of feel like the market's having one of those weeks. So without further ado, let's launch right in. Today, we're going to be talking about Warren Buffett of Berkshire Hathaway buying Google stock for the first time, and a significant chunk at that. Then we're going to talk about Gemini 3, which is Google's AI chatbot equivalent of ChatGPT or Claude. And this is their latest iteration, Gemini 3, which was released, I believe, earlier today. And then finally, we're going to be talking about Meta stock. And we're going to relate that to Google stock with respect to their antitrust settlements. So, over the weekend, 13 Fs were released, which basically revealed what the big investment firms purchased and sold in the last quarter. Warren Buffett was revealed to have purchased 17.8 million shares of Google stock, valued at $4.3 billion. His first position in Google, I believe, ever. What's interesting is that Warren is retiring at the end of 2025, this year. And so this might be his last big purchase, which is very interesting. And what's even more interesting is if you've been following Warren through the years, he's not the biggest fan of tech, right? I mean, yes, he ended up caving and buying Apple, which did really well. We'll talk about that in a second. But he bought it pretty late. And also, you can find all these clips on the internet about him criticizing crypto, the whole crypto market, how it's just garbage. There's no intrinsic value. Very interesting. So let's look at his Apple purchase because it's interesting. It's one of the only other big companies big tech companies he's purchased stock in. He's bought some Amazon as well, but it's very insignificant. So the first iPhone was released in June 2007. Okay. Warren Buffett bought Apple in 2016. Just for context, that was when the iPhone 6S, which is, I believe, the sixth iteration of the iPhone, sixth was out, right? So that iPad had been out for over 5 years already. The iPad Air, the iPad Pro, the iPad Mini, all of these products had been released. So it's interesting that he got in at the time what some would refer to as very late. I mean, I owned Apple. I'm not trying to compare myself to Warren Buffett here, but I owned Apple since 2000, I believe 11, maybe 2012, right? So it's interesting because Apple has appreciated over 700% since he purchased. So it begs the question, what does Warren see in Google now? I mean, Google has been public and around for God knows how long. And he has finally decided in November 2025 to invest $4.3 billion in Google. Very interesting. And, that 13F was released over the weekend, and then Gemini 3 was released today. So that's really interesting too. So it's very interesting. I mean, look, listen, Apple appreciated 700% in 9 years since Warren purchased. And keep in mind, at the time, he was heavily criticized. People thought he got in way too late. Classic mistake, right? That wasn't too late. Apple released tons of products, created tons of value between 2016 and now, and arguably in the future as well. So it's interesting that Gemini, let's dive right into Gemini. So Gemini 3 was released today. Over the weekend on Twitter, everyone was raving about, oh my God, like what they're seeing under the hood inside Google and just kind of sneak, little teasers about what's coming. And sure enough, it came out today and it beat all other, I believe, LLMs in almost all metrics, and some by a landslide. Super interesting. Google, so Sundar Pichai, the CEO of Google, he tweeted that you can give Gemini anything, images, PDFs, scribbles, etc., and it will create whatever you like. An image becomes a board game, a napkin sketch transformed into a full website, a diagram could turn into an interactive lesson. There's a video with that if you want to check on Twitter. And then he goes on to say that it can also analyze your long form sports videos, like you playing tennis, for example. There's a video of that to give you a performance audit, identifying specific technical issues and providing the exact drills to fix them. So you can upload I could upload a video of me playing basketball or tennis, and it could tell me, oh, your form's wrong. You got to, it's super interesting, right? So that's really interesting. Also, I guess it's the first time they've rolled it out into Google search on day one. So I believe in the past, whenever they released Gemini 2.5, 2.0, whatever, that there's a little buffer time before they incorporate it right into the Google search. So apparently it's in the AI mode. And if you haven't tried AI mode on Google search, it's pretty neat. Some would argue that they basically copied Perplexity. I mean, that's my personal take. But hey, it works really, really damn well. And the Google's data is I mean, come on, who has access to that much data, right? Over that many years. So the AI mode is even better now. I tried it today. I asked all sorts of questions, and my God, it spits out this comprehensive answer in literal seconds. So that was interesting. Um, so, what I think is really interesting is there was an antitrust case against Google where they were basically, or rather against Alphabet, which is the umbrella company that houses Google, Waymo, YouTube, Google Cloud, everything that's under Alphabet, right? And there was this antitrust case, and they settled in September 2025. The stock actually saw like a pretty big hike because the Department of Justice, I believe, basically decided that Google is not a monopoly and that it can stay intact. I believe there were some stipulations about how they need to operate moving forward, but in a nutshell, they didn't break up the company. So the stock was hanging for a while, going like horizontal, kind of not going anywhere because I think investors were concerned, with good reason, that Alphabet would be split up and into all these different entities, right? Waymo, Chrome, Android, Google, so on and so forth. That didn't happen. And so the stock went up in September, okay, 2025, so like 2 months ago. And then you see, ever since that happened, if you've been following Google's progress, they've been firing on all cylinders. It's almost like a switch flipped. And it's interesting because there was a period of time where people were, the stock was also not doing too well because everyone thought ChatGPT was eating Google's lunch. I mean, all the young people all over the world were going to ChatGPT instead of Google to search for answers, right? And I believe to this day, ChatGPT is the fastest growing website or web app ever, right? And so, um, what's interesting is after this settlement happened in September 2025, Google's launching. I mean, listen, like today, Waymo, which is the self-driving arm of Google, just came out and said they're deploying to 5 more cities: Miami, Dallas, Houston, San Antonio, and Orlando. And you can already take Waymos right now regularly in Austin, in the Bay Area, in Phoenix. I believe they're basically uh, generating data right now in New York. So they have cars going around with drivers in them, basically like figuring out the mapping situation in Tokyo as well. And I believe they're deploying to London, I believe. So anyway, they're firing on all cylinders. Gemini 3's out now. And I just wonder, like maybe it was good that they allowed ChatGPT to kind of run for a while. Kind of looks good from optics standpoint from the DOJ case situation, right? Hey, listen, ChatGPT, look at that. That's a competitor, and they're all our market share is, bits and pieces of our market share going towards ChatGPT. Hey, it's not just us on the playground, okay? And then this settlement happens, and like, boom, Gemini 3 and Waymo, and it definitely seems like the sentiment switched a little bit. And Sergey and Larry, the founders of Google, have come back to Google, right? To like literally code and like work on these products. Very exciting time. So that's really interesting. So that's actually directly related to what we're going to talk about now, which is basically Meta stock, right? So what's really interesting is Meta right now. I have a video actually. I'll link it in this video. Basically, has a similar situation in that they were going through an antitrust case as well. In this particular case, they're basically, I believe, the Federal Trade Commission is saying that it was a monopolistic move for them to acquire Instagram for $1 billion and WhatsApp for 19 billion, excuse me, dollars, right? And that they were basically generating a monopoly on social media and like connections between people, something like that. And that antitrust case had been ongoing. I believe in the last earlier this year, several top executives of Meta had to go and testify, including Marcus Zuckerberg, Sheryl Sandberg, etc. Anyway, earlier today, a settlement came out that Meta did not violate any monopolistic practices and that they can stay intact. Sound familiar? Yeah, pretty interesting. And what's also interesting is that Meta stock, per my video from a few days ago, is down, I believe, like 23, 24% right now. The price to earnings ratio is very low for that company. So it's an interesting situation. And I wonder now that the settlement's done, um, are they going to be firing on all cylinders? Because listen, if you're in the middle of an antitrust case and you fire on all cylinders and you're destroying all your competitors, that's not good optics. Am I right? So we'll see what happens. It's a very interesting, similar situation as Google, literally just from like a few months ago. Um, so what also was interesting today was the chief revenue officer, John Hedgeman or Hegeman. I'm not sure how to pronounce his name. He left today, or he announced he's leaving. I don't know, one or the other. And he had been working there for 17 years cumulatively. So that's interesting. I think that probably didn't do well for the sentiment of the stock. But listen, if you've been working there 17 years, have you worked somewhere for 17 years? I sure haven't. But once you're after the past the 10 or 15 year mark, I think it's okay if you want to try something different. You know what I mean? So that's in a nutshell where we're at. And I'm gonna try something. I'm gonna try a format, if you will. And let me know what you think about this in the comments, if this is good or bad. But I consume a lot of Twitter and I bookmark a lot of things that I find to be, poignant or interesting or of the time, relevant. And I'm just going to go ahead and share this tweet. So, this tweet is by Brian Feroldi, who I think is a brilliant man. He, I believe, writes for the Motley Fool. But he tweeted this image, which I believe he's tweeted before. I mean, it says buy damaged stocks and has a revenue line going upwards to the top right. And then you have the stock going down, right? And then avoid damaged company, which is basically the revenue and stock lines going downwards, right, from left to right. So this is very interesting. I think Meta is actually applicable here because their revenue, if you look at a chart of their revenue, it is going upward steadily over time. Yes, there's some quarters where it comes down, it goes up, kind of like Netflix too, right? It went down for a little bit and people are like, oh, and the stock sold off like crazy. And then it came back. And I think Meta's in a similar situation. Revenue is going up, stock is going this way. It's just going down, right? And there are legitimate reasons. They're spending a lot of capex on building out, their AI data centers, that kind of thing. And investors are like, oh, that means, Amazon too. When, for the better part of a decade, maybe beyond a decade, don't quote me on that. Their revenue was steadily increasing, I believe, but they had been just deploying all this capex, basically spending expenses towards building out their logistics and their distribution. And now look at what you have. You have Prime 2 days, sometimes 1 day, same day, sometimes within a few hours. And you see these Prime trucks everywhere. Now I see them more than I do FedEx or UPS, and I believe they may have outsized FedEx and UPS. Don't quote me on that, but it certainly seems that way. But it took years and years of build out for that to happen. And during that time, investors were like, oh, I don't know if I want to touch that stock. It seems like, they're just keep spending money. Tesla too, right? Spend money, build out their supercharger system, all of this. It's not a sexy stock when that happens, but if you have a long-term vision and you can see down the road what this is eventually going to lead to, it could be a very good investment. Right. And I'll talk about that in future videos as well. Obviously, your time horizon needs to be at least 5 years, if not 10, maybe even more than that. Right. So you're going to have to deploy money as an investor that you won't need in that time. So that's it. That's the episode, if you will, of today. Let me know what you think of this format. This was unscripted, so I apologize if I'm all over the place. And let me know what you think about this, adding this tweet at the end of the episode. I think it's kind of cool, but obviously I'm not going to do it if it's not popular. So that's that. Talk to you guys soon.